Good evening, investors. Today's markets were dominated by heightened geopolitical and economic uncertainty that led to a broad sell-off across global financial assets. U.S. stock indexes, including the Dow Jones Industrial Average, S&P 500, and NASDAQ, closed sharply lower as investors reacted to escalating trade tensions triggered by fresh tariff threats from the U.S. administration aimed at several European trading partners. This news sparked risk-off sentiment, pushing equities down across sectors and dragging major indexes deeper into negative territory during the session. Bank stocks underperformed as concerns grew over a looming policy shift that could cap credit card interest rates at 10%, a move that could pressure bank profitability and tighten lending conditions if enacted. Major financial institutions, including J.P. Morgan Chase, Citigroup, and Wells Fargo, saw notable declines as investors weighed the potential impact on earnings and credit availability. In commodities, precious metals rallied as traders sought safe haven assets, with gold prices ticking higher amid growing risk aversion. Meanwhile, natural gas prices surged on forecasts of a cold snap in parts of the U.S., lifting energy-related names despite broader market weakness. Overseas markets mirrored these trends, with European shares sliding as investors priced in potential tariff-related disruptions and a broader slowdown in risk appetite. Asia-Pacific markets also felt selling pressure overnight, reflecting the global reach of today's headlines and reinforcing the increasingly cautious mood among traders. Turning to sectors, the energy and materials groups showed relative resilience, benefiting from commodity price moves and defensive buying, while technology and growth stocks lagged amid fears of reduced corporate investment and slowing global demand. Bank and financial shares were among the weakest performers, pressured by regulatory risk and uncertainty over credit market conditions. Investors are now focused on upcoming corporate earnings reports and economic data that could clarify the pace of interest rate policy and growth prospects. For tactical positioning, risk-sensitive investors may want to maintain broader diversification, balancing exposure between cyclical and defensive sectors, while monitoring developments on trade policy and credit regulation closely. Longer-term investors should keep an eye on key support levels in major indexes and evaluate company fundamentals rather than being guided solely by headline volatility. That's your CBN Financial Market update for Jan. 2026. Stay informed and stay disciplined.